Is it worth shorting Bitcoin? If you're interested in knowing more about this, please keep watching. I welcome everyone to join my WSOT team. Currently, we have 431 members on our team. According to the competition rules, the more members a team has, the more advantageous it is. So far, we have the largest number of participants in the CN region, over 100 more than the second-ranked team. Last year, we secured first place in the CN region, and at one point, we were even ranked first globally in team competitions. Therefore, we have the best chance of winning and getting ranked. Join our team to share the $8 million prize pool. If you want a cap, all you need to do is complete the missions, and we will send out 50 of them. Now, let's return to the Bitcoin market. Well, looking at the daily chart, we can see that although it has broken below this level, we noticed that shorting, based solely on a daily downside breakout, doesn't yield much profit. If we want to make a short call on a daily level, we should start from the daily chart. But you will realize that if we entered when it broke through this line, let's say with an entry price of $29,500 to $29,600, we might have only made a small profit, around a couple of $100. In a daily time frame, shorting a smooth downside breakout and drop will get us a profit at least in the thousands of dollars. You will realize that even if we short, using a right-hand side trading strategy, well, the left-hand side is not counted. Some traders may short above here. Well, personally, I don't prefer that approach because it's risky. When the market is rising, we can't be sure if it will break out. Setting a stop loss is also challenging in this scenario, because you can see that some traders who adopt the left-hand side strategy may engage in shorting during new highs. This is not my trading style. This trading style is suitable during price oscillations. My trading style focuses on trending moves. After the downside breakout, shorting doesn't seem to generate substantial profits. Well, we might even find signs of exhaustion in smaller time frames. Let's check it out. Personally, I'm currently not holding any positions. I exited my long position when the price broke below a certain level, and I didn't open any short positions because there was little profit potential. Now, let's switch to the 4-hour chart. The 4-hour chart will provide us with the information we want. We can observe that the current downtrend consists of two waves of declines, one after another, with a period of oscillation in between, which is not an issue. What did you notice? You would notice that during the first downtrend, there was substantial trading volume. However, the volume is shrinking now. You can focus and closely examine these two candlesticks. What can you observe about the second candlestick? This candle had a body-to-shadow ratio of around 1:1, suggesting that this level is supporting the price. Otherwise, it wouldn't have formed a relatively long lower shadow. Furthermore, the candlestick with a larger volume is not the first one. It's the second candlestick that showed the long lower shadow. So, what does this indicate? It suggests that, at this point, the price encountered some support. Otherwise, such a candlestick pattern wouldn't have emerged. Then, I pay more attention to the price performance during the oscillation period, which we have after this. In this analysis, we can observe a slight upward movement. And when we compare the volume, at least for the current situation, it's the rebound volume. When we compare it with the volume from the previous movements, we will notice that if we exclude the candle because it has a longer lower shadow, and consider only the first bearish candle, the volume appears to be similar to previous instances. Now, let's consider why the downtrend movement continued before this. Actually, we had discussed on Twitter and whatnot that after this drop, the subsequent price correction phase exhibited extremely low trading volume compared to the previous volume. Afterward, the trend continued from before. However, it's worth noting that the bearish momentum had significantly decreased. Let's do a chart review. I always do a chart review. You can look at this period. I wonder if you still remember this. It's clear if we view it on a daily chart. During that time, we experienced a downside breakout from the entire upper range. The upper region over here. The price was supported by this line. However, the market eventually broke below the support level here, which immediately triggered the start of the second upward wave. When looking back at this situation, how should we identify it? Alright, the price has already moved upward here. It's speaking with hindsight. It's alright. Let's focus on the part before. The significant price surge We will only refer to the segment before it. Let's make a comparison and summarize it. After the price hit a new low, we immediately witnessed a candle that completely engulfed the previous downtrend, with even a slightly stronger impression of bullish volume. Furthermore, the previous high point was breached during this reversal, marking the end of the retracement and the start of the next bullish move on a daily chart. In the past, when the last correction phase ended, we experienced a similar scenario. On a daily chart, you will notice that the price movement after the price hit. Let's zoom in and take a closer look at this specific area on the 4-hour chart. What can you observe? After creating a new low, the bearish volume didn't keep up, and the candles became shorter in length. Although they have continuity, which is a fact, it indicates a depletion of supply. Subsequently, a strong demand emerged, leading to the reversal and the beginning of the next upward move. This is valuable. You might say that the price had moved upward, but we should focus on capturing the larger waves of upward movement, rather than waiting for the significant price surges. To confirm the trend change, we can roughly identify the signal before it surges. Evaluating the current situation, it may not be as extreme as the example we presented earlier, but it appears that the bearish momentum isn't powerful. If you're holding short positions and aren't seeing much profit, you should know why. If someone took a short position using a right-hand side trading strategy, entering at around $29,600 to $29,500, they would have barely made any profit until now. Although the current performance is quite different from the example we mentioned earlier, well, it might not be the most suitable timing for going long. I'm still observing the market. I believe that once supply exhaustion is evident and the price has bottomed, there will be a better entry opportunity for long positions. If we seize this opportunity, we have a great chance of climbing the rankings and sharing the $8 million prize pool, which is real money in USD and can be withdrawn directly. I welcome everyone to join the most champion-worthy WSOT team in the CN region. Last year, we finished as the top team in the CN region and even reached first place in the global team competition. Currently, we have the largest number of members, and as per the rules, the more members a team has, the more advantageous it is. Now, let's switch to a smaller time frame, the 1-hour chart. Here, we can observe repeated tests of the upper resistance zone. If this zone is broken and the price moves upward, the current drop could become quite interesting. It's around $29,400. Okay, we should pay attention to this area. It's essential for bears to pay close attention, especially if you shorted it during the downside breakdown. Well, it's okay to short sell it. It can be somewhat profitable anyway. However, if this level is breached, short positions will become risky. Personally, I have another example of such retracements after a downtrend and subsequent reversals that left a deep impression on me, as I managed to seize the opportunity at that time. Of course, not every opportunity is easy to capitalize on, but this one was. Look at this subsequent uptrend. Okay? We can observe the previous market conditions to get some clues. At that time, the price broke a critical support level at around $40,000, and it seemed like everything was in ruins as it dropped to $33,000. It was a drop from $40,000 to $33,000, and it's a right-hand side trade. It wasn't shorting based on the left-hand side. Shorting from this downside breakout to $33,000 could have resulted in significant profits. When the price broke through the support and hit $33,000 at one go, many thought Bitcoin was going to break $30,000. However, the subsequent market action showed otherwise. After the breakdown, we saw the bearish momentum weaken, followed by a strong and voluminous rebound. This marked the bottom, and eventually, the price even surpassed the previous high. The subsequent market movement witnessed a strong bounce amid a bearish market. I believe recognizing such opportunities can be highly beneficial and profitable. If you're interested in getting a cap, share any video of mine and attach a message to a Chinese cryptocurrency community with more than 500 members. Then, screenshot the message and send it to this email to receive a free Bybit exclusive cap, which will be delivered to your address. Alright, thank you. You're welcome to like my videos, subscribe to my channel, and share my videos. Turn on the little bell button to show me your greatest support. Thank you so much. Bye bye.